Hey everybody, so this is Patrick Sukup with Sukup Real Estate Services in Fort Collins, Colorado. Today I'm lucky enough to talk with Ryan Martin, now of Chicago Title, but I met him, a few years back when I was looking for a really strong title company that didn't just do anything with closings, but also would help you build your business. And Ryan really was a major influence and help to my career and my business. And he really got to know me as a person and an individual when really I was small peanuts. And I'm not anything big by any means right now, but it's been great to have somebody with his knowledge, expertise, reach out to me and really just care and understand what I'm trying to do and get to know me, and then really have an amazing product and team around him that he built to help us dive into, successful real estate transactions. I'm going to let Ryan kind of take it away. I know he's got he's had some big news just in the recent last few days, but I know he's going to do great things, and I look forward to having a really long-lasting relationship with Ryan throughout my career. So Ryan, go ahead and take it away of who you are.
Yeah, well, thank you, Patrick, for having me on. I appreciate it, and the feeling's mutual. I think you're doing some amazing stuff with your business and how you promote yourself, and I'm looking forward to continuing to collaborate and do this together as we both grow. So, Ryan Martin, I've been in Northern Colorado for a little over 20 years. I've been in the title industry going on 20 years, working in various capacities in sales, marketing, some title, and most recently had a great opportunity to join Chicago Title of Colorado to run their Northern Colorado operations, to start those and build those. And the main goal is going to be to surround yourself with the right people, which I think we all want to do in our businesses. And so that's what we're going to do. We're going to try to find the right talent, connect it so that we're working as a team together, and right attitude and mindset. So that's what we're looking to do, starting with looking for space. And so in the meantime, for you, Patrick, or anybody else that is watching this down the road, I'm still available as a resource to answer questions. It's important for me that as I build this, we're not ready to do deals yet, but we will be. And so I want to be a resource in the meantime. And then when that time comes, I'll be having those conversations with yourself and whoever else in the industry that's needing title work. But we don't want to fall on our face. We want to be able to provide good service for you and your customers. And when that time comes, you all know it.
Sweet. I'll have to reach out to you here sooner than later, actually, because we've got a little marketing campaign that I want to put on with a property that came on the market that I think you'd probably be able to help me out with and get me connected. So I'll have to reach out sooner than later. How did you get involved with title?
Title? Oh, that's a good question. So, so part of the background, my wife and I, high school sweethearts. We just celebrated 21 years of marriage, and she went to UNC. I went to a small school in Iowa. Came back because this is where she was in Colorado. And anyways, all that to say, it's the old saying, it's not who you know, but who knows you. And there's variations of that saying, but that's how I say it. And anyways, I was trying to figure out what I was going to do for a career. I tried a few different things. We were married, had our first one in the oven, first child in the oven. And my brother and sister-in-law knew a real estate agent in the Brighton area. I had a friend that owned a small title company and hadn't had a business development person, a salesperson. And so long story short, I ultimately got a 6-month trial to see how that went. And here we are, almost 20 years later. So for me, it's the grace of God that a great opportunity for a career path was presented when I wasn't sure what I was going to do.
Yeah, we have a beautiful family. I follow you on the social medias. You're an amazing provider, and clearly, very successful in what you do, and take great care of your business and your family. So obviously the success is there, and Chicago reaching out to you, I'm sure they saw something just like we all see in you as someone who can take something from nothing and build it into something pretty great. So it'll be fun to watch. build it from the ground up. That's for sure.
It's going to be fun.
So
there's all the boys in the background, by the way.
Yeah. Is it 7? Is it 7 boys or is it
7 boys? Yeah.
Is it all
boys?
7 boys?
Yeah.
That is insane. When's number 8? When's the 8th coming? And when's the girl?
You know, we don't make girls, so I think we're done. That ship has sailed. We'll have hopefully 7 daughter-in-laws here at some point, and we'll have a girl. So
cool. My dad, their family, they had 5 boys, and then the 6th was a girl, and that was when they called it.
Yeah.
You know, so
we kept trying. We don't make girls.
That's too funny. That's amazing. Well, it looks like they're all, very happy and, athletic and smart and all different, various different things that they're all interested in. So it's been cool to watch your family grow.
Fun. So, yeah, lots to be thankful for. For sure.
Well, I think, honestly, I actually just got this question from a client we just closed on a property about a month ago. He goes, why am I getting title insurance? Like what, just the basics. Like what is title insurance and why does an individual want it and need it?
Right. So I'll try not to get caught in the weeds on this, but ultimately there's going to be a couple reasons. When you're buying, you're going to be required to have it, probably because 1, it's part of the contractual agreement between buyer and seller that's saying the seller is going to provide the buyer. 2, if you're buying and you have a lender that is going to be giving you purchase money, they're going to want to have their collateral insured with title insurance. And what you're ultimately doing is, title insurance, it's a bundle of rights, and we're insuring those bundle of rights subject to the exceptions of your title policy. And those exceptions being things that through time and agreement give someone else an interest. So that could be covenants, that could be a utility easement, an access, things like that. It's subject to that. So that is what we're insuring. Now there's 2 functions of a title company though. We're doing insurance, right? The title insurance, protecting the ownership right of the new buyer, the homeowner. But then there's the escrow side where we're going to talk a little bit about that today on the settlement statements, where we are collecting and dispersing funds according to the agreements that tell us how to close a deal. And for us, those 3 instructions that tell us how to close a deal is number 1, the real estate contract, number 2, the title commitment that has certain requirements on there as well as the exceptions. And then 3, if it's a purchase money loan, it's the lender's closing instructions that have a number of items that we need to do on how we collect, disperse, show numbers, things like that. So those 3 things tell us how to close a deal on the escrow side. So 2 functions, insurance and escrow. Right.
And on the escrow side, there's we're doing a few different deals in different areas of real estate, but I was talking with a younger individual getting involved with on the investment side of things, and we talked about a deal that we were doing that did not include escrow. And I said, we aren't necessarily protected. They could, take our money and run on this. Whereas when you do a real property transaction, we're going to be putting our funds in escrow. It's a third party, non-interested party who ultimately can only be dictated by mutually agreed upon signed documents that,
right.
You protect both interests. And, it's always interesting how people describe real estate transactions really across the country. I'm in escrow or I'm under contract. But ultimately you guys are dictating that escrow and hold a lot of responsibility.
Yeah, absolutely. But you're right. And there's lots of things. You hear the term escrow sometimes and you have to define it a little bit because, you're on the West Coast, and a lot of those states are called escrow states, where, Colorado, where table funding, buyer and seller typically come close at the same time. Ultimately, we're funding the same day is what that means. Right now with COVID, we're not closing typically at the same time, but we're closing the same day and we're funding the same day, where in escrow, they're holding funds and wait till things are recorded and then they disperse and things like that. So you'll hear that term sometimes, escrow, and that's what it's referring to. But then there's also escrow that your taxes and insurance are held for your with your bank. And then there's escrow with a title company, and you'll hear that term, and that just means that escrow officers, that group within a title company that is, executing on the terms of those 3 instructions we get, and then as well as collecting and dispersing funds. So, the purchase money loan comes into the title company's escrow account, and then we're paying off the existing loans of the seller. We're, maybe paying taxes, HOA fees, and all those things where monies are coming in and going out, and we're handling that. So that's kind of what escrow means when we talk about it with a title company. And so when you don't have escrow, you're right, there's not a lot of protection there on where those monies are coming and going and who's in charge of it.
Yeah. And one of the questions I actually have had recently is there was work that was needing to be done on the property that was not going to be finished by closing, and was asked, can funds be escrowed until that work is completed and then dispersed when that work's completed? Could you talk to me about different things maybe you've seen, ideas, opportunities, maybe costs associated with that? If there's anything like that needs to be escrowed.
Right. So I'm no expert on them, but I can share enough to where people have an idea of how it works. So typically as a title company, we see that more often than not when there's work being done. In Colorado, a lot of times that's a roof or something like that. There's a new roof being put on. It hasn't been completed. And so the day of closing, everybody still wants to close, but we need to hold those funds back to make sure it gets paid for. So an escrow agreement is going to be an agreement between buyer and seller themselves. We're not really a party to it other than telling us what to do with those funds. So it's the who, what, when, where, why, how of the transaction. And you want a definite end date on escrow instructions when we need to hold funds. That way it doesn't drag on forever. A title company doesn't like to hold funds. It's just going to be ongoing and ongoing because we have to account for that money. Typically it's for a roof. You're going to often see whatever the projected invoice amount is, 1.5 times that amount will be held. And that's because if there's overages or costs, you don't want anything extra that's not held for. And then, then there's a dispute on who's going to pay it. So 1.5 times. And then, like I said, there will be a definite end date. Like maybe there's a certain amount of time given. And then if it's not, there's not been an invoice presented or the work hasn't been done by this time, then the funds will be distributed to buyer or seller or whatever that agreement reads. So that's where we see it most in title on materials. There's not a whole lot of other situations. Like if we're going to, sometimes on big commercial deals, you'll have escrow for like water, let's say. There's a big commercial land deal. And typically the title company doesn't hold those funds on things like that. But each title company is different on their rules and what they're comfortable with.
Sure. And how simple is that to set up with you, or difficult? Is it, do they need to have a written agreement, or does it need to be contractual? How does that look on your side?
There'll be a written agreement that buyer and seller will sign, and it's easy enough. I mean, we've been at the closing table and need to execute those on the day of closing. Mm-hmm. So now, like I said, each settlement company, each title company is a little different, but in places I've been, we have like a standard set of closing instructions, and then you fill in the blanks according to the dates and deadlines and the parties involved. And then we use those standard exceptions, and then you may have an exhibit that you're pointing to specific items of that escrow. So it's easy to do. An escrow officer can throw those together and within 20, 30 minutes, so long as everybody is agreeable to the terms, buyer and seller sign them, and then we follow those instructions.
Gotcha. Yeah, I mean, honestly, I think one of the things that I was talking to a lender earlier today, we were going through kind of a similar video talking about getting in the weeds, because I think sometimes I think that's where you can really help. I mean, don't get me wrong, sometimes it can get pretty boring, but in reality, if you can just educate yourself, you just can relieve so much stress. And when I did one of my first, like a lot of my brokerage began with buying and selling property for myself. So I was my own guinea pig. But one of my first clients was my sister. And, I'm self-taught on a lot of different things. I didn't go to a big brokerage house. I've just, learned as I went, read as many books as possible and, leveraged individuals such as yourself. But one of the things that I learned real quick with a client like my sister was I didn't realize after we closed on her condo, my mom and dad come to me and they go, your sister was so stressed out this entire time. I was like, why didn't she ask questions? And on my side of taking responsibility, I was like, why didn't I, offer guidance more as far as like, hey, if you have questions, if you have concerns. But a lot of it just comes down just to education, because on the house that she bought, very little to no stress. She's been through it. We talked. I understood on the deal that she went through initially that she had those stresses and concerns. So I went above and beyond, reaching out to her, bi-weekly. Here's where we are. Here's what's going on. Here's what you can expect next week. Here's, do you have any questions or concerns? Let's address them. But, for me, something as simple as what you were just saying, it takes a lot of relief off maybe an agent's chest. Like, okay, like, granted, let's not get to the closing table and let's have a boring closing. But let's make deals happen and not destroy deals, but make deals happen. And I think that's one thing that I've learned a lot of over the years is Northern Colorado is pretty phenomenal. A lot of great people, agents, lenders, title, and generally speaking, all high character, keep themselves above board. And so
does this relate to your like new first time home buyer and what advice would you give to a first time home buyer to better understand the process and that causes anxiety and curiosity?
What was that?
Is that what you're talking about? Is that what you're talking about with this? Like, how can you help with the anxiety and curiosity of a new first time home buyer?
Exactly. So time can be, it's such a unique deal. And then, actually that's a great segue into let's jump into this, the buyer and seller settlement statement. Because ultimately my story goes, I got that dropped on me. And then all of a sudden I'm getting hit with like a $5,000 in addition to my down payment that I need to bring to closing. And I had no idea anything that's going on. So if you don't mind, can we jump into a buyer and seller settlement statement? I'm going to share my screen with you.
Yeah, but as you're doing that, Patrick, and if I'm jumping ahead, just tell me. But one of the questions was for the first time home buyer and what causes anxiety and advice. And one of the things I would say, which is like what you were doing when you were checking in with your sister, is one, utilize your resources. So as you're doing a deal, I think what causes the anxiety is they don't understand the process. They don't understand the terminology. And sometimes in the industry, we're saying things, there's acronyms or there's statements of things that we know because we're doing it each day, but they don't. So I think then it's the follow-up question like, does that make sense to you? Do you understand what I'm saying here? Or explaining what one is, because we'll know, when there's an acronym, we know what it is. And so we know we need to explain it. So I think it's that. And then utilizing the resources around you. So if it's title, like I always tell agents and lenders I work with, man, if your people have questions and you're not sure, have them call me. Like I want to talk to them. I want them to be comfortable and they're okay to use me as a resource for that. And the same thing with, lenders you work with. If they want to know the breakdown and understanding of APR and the exact makeup of their lending figures and numbers, then direct them to their lending resource who you've affiliated with. That's a good teacher. So.
Yeah, I couldn't agree more. Especially like you said, just leverage the experts. I would say I know high level, a settlement statement, going through it, how to draw it up, what things necessarily mean. But honestly, like there's times where you guys have just not pulled me out of the fire by any means, but just really been an additional huge asset to me to help describe it and help a client understand what both sides mean, the sellers and the buyers.
Right.
I think that's somewhere sometimes I get, probably I need to leverage it more. And when I have, I've been extremely grateful to have folks like yourself that know it a whole lot better than I do.
Oh, thanks.
So,
thanks. Well, let's jump in.
So my story was, like I said, the first house I ever bought was actually it was a cash deal. It was a fix and flip. So the second house I bought was a finance deal, and I had no idea what type of fees came with financing a property. And the title company sent me the settlement statement a few days prior to closing, and it was a gut punch. But going into it, like you said, on the front end, having the knowledge and education of what to expect as a first-time home buyer, high level would be great. So walk me through this, and I'm going to give you you just go ahead and walk it through it, and then you tell me when to scroll up or down. But what these mean, what they could mean, and what to expect.
So I'll just go through each figure here we see. So this is a buyer settlement statement we're looking at. So of course we have a debit, that's the agreed amount purchase price. You always see that as a debit. You'll see a credit for the earnest money, because they probably put that at a title company that's holding it, and they have those funds in their escrow account already. So as they're putting their numbers together, they're going to give them a credit for that. In this case, it's $3,000. And then you're going to see a credit for the new loan amount. That's going to, both the earnest money and the new loan amounts going to be credited against that purchase price amount. And am I addressing these as you're looking for? Just explain the settlement statement.
Exactly. Yeah. Okay. So what I would like to see is and each one's going to be very different, obviously, each settlement statement. But let's go over main parts. So we'll go over the financial, loan charges, title, and then kind of these prorations adjustments. Let's adjust those kind of on the back side. But let's jump to loan charges and walk me through. Obviously, on those, you just are probably bringing those directly from the closing disclosure, I would assume.
Right. So the closing disclosure and the lender's closing instructions will have that in there. There's a copy of the closing disclosure in there. And you'll see, so this is this buyer settlement statement. And then you'll see on the CD, the closing disclosure, CD you'll hear often, is the one the lender sends us. And it's going to have a breakdown of all the fees and everything on there, along with some of the different the TRID, the Truth in Lending Disclosure Act, or disclosure, the acronym for acronyms, I call it. But so as we go here, your loan charges, those are going to all be fees that come over to us from the lender. They tell us what to put in there, and then we match them. So these are all set by your lender. Now the prepaid interest is going to be because you're going to collect a certain amount of interest up front, and then your next payment won't be due. So if you close here in August, your first payment's not going to be due till October 1. So they're collecting interest. And then all those other things, and every lender is going to be different. There could be origination charges, that would be a buyer paid, the processing fee. Anything in regards to the loan is going to be paid by the buyer, unless there's some seller concessions where the seller is agreeing to pay up to a certain amount of costs for the buyer. Then some of those could be paid for by the seller. The appraisal fee, which you'll see on here often, whenever you see POC, that means paid outside of closing. So oftentimes the buyer has paid for that appraisal up front, and they need to show that, and you need to disclose every charge of the transaction on the settlement statement. And so they're just showing that, hey, there was a charge of, I think in this case it looks like $500, but that was paid outside of closing. So it's not a debit or a credit here, it just shows that that amount was paid. And then some of the other things that will be very typical on any loan charges is your flood certification, your credit report, and those things that are just part of getting a loan. Now the impounds, those are going to be a buyer debit, and those are things that are there to set up your escrow account for your new loan. So if you're escrowing taxes and insurance, there's going to be an amount of impounds on there. Now, since I'm here, should I address the aggregate adjustment, or?
Yeah, let's go ahead and address that. Honestly, what is it and how does it come to be?
Right. So it's a magical formula, the aggregate adjustment, but it's there's according to RESPA, there's only so much that a financial institution can hold for their escrows. So their escrows are based on their, if you broke down a 12-month span of their taxes and their insurance, but they can only keep so much. So once they've impounded a certain amount for their taxes of insurance that lender's requiring, there's so many months, then they may have to do this aggregate adjustment to credit back because it's over the amount that RESPA allows. And I am definitely not an expert on it. I don't understand the formula exactly. But the way I understand it, the simplest way to calculate the aggregate adjustment is to make a short summary of the year's payments and expenses, and then with a line of every month. So you enter the amount of the tax due, of the insurance, and other regular expenses that may be part of that escrow, and then you add up the total expenses for that year and divide by 12, and then that gives you your monthly escrow amount and the deposit that you'll need, and then then they'll make their adjustment after that. So once they've done all that, they credit back anything that's over how they make that calculation for the aggregate adjustment. Does that make sense? I know it's confusing.
No, it makes complete sense. Actually, I was talking with one of the questions that I had, and I'll ask it to you now. Well, maybe wait to the end, but one of the questions that I will ask is, where can a buyer or seller, push back on title? What fees can they, push back on and try to negotiate? But ultimately, a lot of what's dictated is by, government agencies, and there's only a certain amount of money that you can charge, and you have to charge the same amount to everybody, because otherwise, a more savvy buyer is going to get a better deal than a less savvy type deal, and that's just an unfair advantage. Right. And so it sounds like it's just something that, is you guys just have to, like you said, a magical formula, and make sure that you're following it and somebody's not being taken advantage of or, unfairly, charged.
Right. So certain fees, of course, it is what it is. Like the amount of impounds is what that lender wants to have in their escrow accounts, and then the aggregate adjustment is what it is for what they have to give back. So there's a couple things on how I'd put this. It's not just what you can negotiate fee-wise. Yeah. There's also what services you can shop for, right? You can shop for different lenders. You could shop for title. Yeah. And then there's different tolerances within there. Like if there's different buckets. So if you get to shop for a service, it's usually under a no tolerance or a 10% tolerance. If you don't get to shop for a service, then it's under a 0 tolerance, and there can't be any changes. And if so, then the lender may have to eat those additional fees if it's different from your loan estimate to your actual closing CD. So hopefully that makes sense. So like title, you can shop for your title service. Now, oftentimes in a purchase transaction, the seller is paying for title. In Colorado, the contract will say seller selects, seller pays. And so in that case, the buyer, I guess they could technically shop for the title insurance on their lender's policy that they'll pay for, but they won't get as good a deal, because you get an owner's policy with a lender's policy, you get a discounted rate. It's called a concurrent policy, and it discounts that lender's policy. Yeah. So it really wouldn't be in the buyer's best interest to go get their own separate insurance. So you always see whatever the seller picks for the owner's title policy in closing, the buyer will get their lender's policy there because it's financially beneficial for them.
Which it looks like on this one, like the lender policy was $400. If they went and shopped that, I mean, not that we would know on this deal, but they're getting a discount because they use the same. This settlement statement, they use the same as the owner's policy. So,
right. So this would be, it doesn't state it exactly this way on the line, but just knowing the fees, this is what we'd call our bundled concurrent policy, which includes the standard endorsements that a lender would typically require. And then it includes the concurrent policy amount. So the concurrent policy amount plus standard endorsements. And so a lot of settlement companies will have on the lending side like tiers, like loan amounts between 150 and this is just an example, like 300 is this amount, 300 to 600 is this amount, or whatever those tiers may be. That's what the lender's policy would be. So in this case, you're getting a concurrent bundled, and then the higher insurance cost would be to the seller who's paying for the owner's policy, which you wouldn't see on here.
Gotcha.
So you can't shop for like title rates. You can't negotiate. By the way, as title companies, we're regulated by the Division of Insurance, and we have to file all of our rates with the Division of Insurance. So every sales price has a rate for your owner's policy, and every loan amount has a rate for it. And so you have a filing for the rates. And when I say rates, I'm always referring to like the insurance side of things. When you hear fees, that's in regards to the filed rates for the escrow services. So your real estate closing fee, your loan closing fee, and those things.
Sure. Which makes sense. And, learning new things today, which is nice. And, which leads me into my next one. Closing protection letter. I see some settlements have it, some don't. Some refer to it in a different, verbiage. What is it? I mean, it's $25, so I don't, we don't need to go too crazy because people just look over it. But,
right.
20 different $25 charges add up a little bit, here and there. So
right.
What is the closing protection fee or letter that I can see on some of these settlement statements?
Yeah. So what it is it is a title company insurance product ultimately. So lenders will request a closing protection letter. That's when you'll know if it's needed. If the lender requests it, and 99% of the time they're going to request it, especially on like conventional financing or traditional financing. And what it's doing ultimately is they're sending purchase money funds into a settlement company's escrow accounts, right? And so the closing protection letter is basically saying, hey, lender, we're going to protect you against fraudulent acts of the settlement company. So if those funds get into their escrow account and they misappropriate those funds or do something fraudulent with those funds, the underwriter for that title company they're protecting that lender against those acts.
Gotcha.
And so that's why they request them, so that they don't send $400,000 of purchase money loan somewhere and those funds get used as something else. And now they're like, hey, where's our funds? So that's what it's for. Now there's some caveats to it, and I'm not sure I'll articulate it exactly right, but the closing protection letter. So you have two types of title companies. You have title agents. So I could start Ryan Martin Title, and in Colorado, I think it's still like $10,000 worth of capital, and then you find an underwriter, a large national underwriter like a Chicago Title, to underwrite it. So then I could do it, but I'm an escrow company that's underwriting on someone's insurance paper under the agency agreement I have with them.
Okay.
So I'm not a direct operation. Now, companies I have been at, and I believe in the model, is like Chicago Title is a direct operation. They underwrite on their own insurance paper.
Sure.
First American, it was the same. They underwrite on their own insurance paper. And I think there's some stability in that. And so because when you're a direct operation like Chicago, it's really one and the same. You don't necessarily need, like the escrow is the same as the insurance. You don't necessarily need a CPL, but their lenders require them. So we issue them.
Gotcha.
And that's why you see the $25 fee for that. Now, as a side note, in Colorado, I think it was in 2016, CPLs traditionally have always been for the lender. But in 2016, because of some of the misappropriated funds with title agents in Colorado, the same concern can happen for a buyer and seller who sends funds into an account, like their money they're bringing to closing, and then something's misappropriated.
Oh, interesting.
So a buyer and seller they could request on their own a CPL to protect them and their funds against the misappropriation from a settlement agent. So that is available. And I'll have sometimes an agent call me and say, hey, have you ever heard of this title company? I don't know them. I'm not familiar with them. It looks like they're a title agent. And in those cases, I recommend, for $25, get a CPL for your buyer or seller. Because if something happens and that agent goes defunct for some reason, and by the way, these information is a little bit stale, but within a couple of years ago, I had heard at one point in Colorado, in the last 10 years, so it'd be about last 12 years, there's been close to $10 million of misappropriated funds from title agents' accounts. And so that's why it's important to have that protection.
How'd you find your house again? How'd you buy your house again? there was some funds that went into your account that shouldn't have gone, and then you just bought it cash, right? Is that?
Yeah. Right.
Yeah.
I'm picking up what you're laying down. Now, now that goes into some of the other things, though, like a title agent. They don't always have all the checks and balances a big national company has. You know, I love small business. I support small business. But I have said for a while now that when it comes to title insurance and you have hundreds of thousands of dollars of other people's monies going through an account, I want big, safe, and secure in that case. And in a big company like Chicago, we're going to have the checks and balances to make sure those funds are protected. Like, who can cut checks? There's trial balances and all these reports that are run to see where these funds are going. And so someone can't be sneaky about it. An owner, you know, and an agent could take some of those funds and put it somewhere if they're in control of the account. That can't happen with a big company. So I just think there's some protections there. And that's in the non-sexy things of title and in the nuts and bolts, but it's important.
Sure. Yeah, I do a lot of management of property as well, and have my own properties that I've invested in. You know, I'm holding people's security deposits, you know, that technically is not my money. You know, I'm holding that in a trust account so that if in the event that there's some damage, but there's some horror stories in all different businesses, but for sure, you know, smaller operators have less checks and balances, and, you know, a quick trip to Mexico with $100,000, you know, gets you away from a lot of stuff. So hopefully it doesn't happen to you. But so for $25, that's interesting. I did not know that, you know, at all.
Yeah, I think that was 2016. Colorado changed that so that buyers and sellers could get them.
Gotcha.
Yeah.
And you know, the closing fee generally is it's split between the buyer and seller, pretty much negotiated.
Right.
I messed up on one of my first deals. You know, the buyer, he's like, hey, I'm tight on cash. I need the seller to pay all closing costs. And I mean, I could negotiate that in there. It's not a huge dollar figure, but it's kind of ticked up over the years from 150 to 160 to 170 per, you know, buyer to seller. That's just to cover costs, cover closing, you know, additional CPI type stuff.
So that goes towards the escrow services, like the closers at a title company and that escrow staff. That's what that fee pays for. And even, you know, sometimes there's a deal where it's just a title only or something like that. Or maybe, let's not use that example. Let's say it's being presented by a notary or someone else. Like, there is still a lot of work being done in the background by the escrow group. Yeah. And so that fee doesn't go away. Now, a notary may be paid a portion of it. Or let's say, you know, there's some banks where they would present their own docs, like a First Bank. Oftentimes their lenders would present the documents. But the fee is typically the same because you're still preparing settlement statements, you're still paying off, you're still doing all these different things. The present is, you know, the easier part of everything that's going into the closing service part of it.
Yep. And then this one I kind of learned on a little bit more today. If I brought my lender and they closed my loan for me at closing, this next line, does that disappear, or is that something that is always going to be there? The loan closing fee to this company is, or if it's like, you know, a big national Quicken Loans who, you know, maybe they just send you the loan documents, expect you to close it, send them the CPL, and then that fee comes into play. Is that my understanding that correct?
So that fee would stay because, and kind of for the items I was mentioning just a little bit ago, that we're still doing settlement statements, we're still collecting funds, we're still dispersing them. All that stuff in the background is still going on, even if somebody else presents it. Now, when a notary is presenting it, or, you know, maybe someone from the bank is, you know, the fee to pay the notary may be taken out of that fee. It depends on your settlement company on what they do. Some will just take it out and pay it. Others will charge an outside signing fee on top of that. Gotcha. So you'll want to check that particular title company and see what their protocol is on that. And it would be, the outside signing fee is probably somewhere between 120 and 150, so long as they're not having to send a notary somewhere far to travel. Sure. But at most places I've been, if we have to use a notary or it's an outside fee, then that is just paid for out of the closing fee. Now, on this particular statement, this has First American on it, and their closing fee also include the recordings of the deed of trust within it.
Yeah.
Where others will be like a lower closing fee. It might be like $320, $340, but then you would pay your recordings on top of it.
Gotcha. Okay. Interesting.
Yeah.
And those next three are pretty much standard between all contracts of your recording fees for the warranty deed, deed of trust, and your state doc fee. You're going to see them on all settlement statements for a buyer. And the state doc fee is based off of the purchase price. Is it what, 10%?
0.001% of the sales price. So $200,000 is $20.
Gotcha.
And so on. So yeah, so that's a fee. I believe it's a statutory fee that has to be charged with the purchase. So that will be collected. And then, yeah, those closing fees. Now you'll see on this settlement statement that you have here, just like I was talking about in this, the way that First American does it, they have I'm pointing at the screen like you can see it, but the warranty deed recording is paid for out of the real estate closing fee. So that 170 and 170, that's split in half by buyer and seller. It's paid for out of that. And so you'll see below, it'll say paid by other settlement agent, and it puts a fee down there. And then the same thing for the loan closing fee, the recording of the deed of trust is paid for out of that closing fee. And so it's not a debit here, but it's just showing that an amount is being paid as part of the transaction that's included in the seller fee. But most other title companies, I think they're unique to do it that way. Most of your recordings are going to be, I don't know, let's say like if a deed of trust, depending on how long it is, like let's say $80 to $103. So for a title company that just has their closing fee and charges the recording separately, it could actually be less for that buyer because they're not just bundling it into the settlement fee. Does that make sense?
Yeah. Yeah, okay. Absolutely. And, and this next section, the only thing that I want to hit on is, because I feel like, and I just did a video of this, like HOA closings can be, add like 12 rows to a closing real quick.
Right.
But,
they're fun.
Yeah. And we don't have any, in Fort Collins, we don't have any water transfer fees or anything along those lines. What are some kind of unique lines that you might see on a buyer settlement statement that's not an HOA, line item?
That's not HOA related? Right. Let's see, something that's unique that would be on there. But there really isn't a lot. I got to think of a few scenarios where it'd be, HOAs would be unique on there. You might have and that would be more seller side. Nothing. I can't think of a lot right now, Patrick, that would be unique outside of HOA. Now, like you said, HOA can have a lot in there, and there's not, unfortunately, there is not a lot of choice for the buyer or seller on what those fees are.
Seriously. We just went through one over kind of like in the Grays Peak, Hans Peak area. I couldn't believe it. It's just like there was two different HOAs. There was transfer fees, association documents, capital contributions. It was extensive.
Yeah. So that's what you'll see there. But one item I can think of on miscellaneous that you'll see that wouldn't be the case on a buyer's settlement statement, but would be on a seller's. And that's where you have a seller that's closing at the title company, and let's say they're, just for easy math, they have $200,000 in proceeds, but they're purchasing another home. So they're going to see at the bottom here. So let's say 150,000 of that needs to go to another title company to close. Yeah. Right. Funds to close. So you'll see at the bottom where it says due, in a seller's case, it would say due to seller. And it would, you might have like due to seller 50,000. Right. And then under miscellaneous, you would have a description of those funds that are going, the additional 150,000 that are the buyer's funds, but are being paid to so-and-so title company for their funds they need to bring to closing. Gotcha. And that would fall under miscellaneous. Gotcha. And that's a topic that's good. more for the real estate professional to know, because sometimes we're not told that in time. And they're like, hey, by the way, we need you to have a check cut, like a cashier's check, which cashier's checks, even though we have ability to print those in office most of the time, it's a process to get that. It needs to go through approvals and whoever the banking vendor you work with. It takes a little time. Now wires are quicker, and we can absolutely wire it to that title company, but then we need third-party wiring instructions, and they have to sign that that's okay, right? Because we don't want emailed wiring instructions because of wire fraud. And so, and then the settlement statement needs to reflect that money going to the other title company and not the full amount of proceeds going to the seller. Gotcha. So knowing that in advance is very helpful, so we have the settlement statements correct.
How far in advance? Like a day, 2 days, longer the better? Yeah.
Really, the sooner the better, but oftentimes, if they're purchasing a home, they may not have their final number or how much they need to bring from this transaction that's closing. Just enough time to where before people sign, we can have accurate settlement statements in front of them.
Sure.
It's not hard to change. It's just they may have signed their settlement statement and said, oh yeah, I need these funds to go there. Well, then we have to go back in, change the settlement statement, and then have them re-sign it, showing where the monies are going and stuff.
Gotcha. Okay. Well, I know I mean, this is my fault because I told you beforehand, I'm not a great interviewer, but I'm doing a lot of this because I like to hear the knowledge and everything that you've got going on, and you've done an amazing job of explaining it and helping me grow my understanding. But one of the things that I wanted to hop into is reissue rates and then the seller settlement statement, because for me personally, I do a lot of investment properties and deals, and reissue rates are a big deal. And, right. It makes sense to go through the same title company that I closed on the deal with. And what's the time frame for those? And what can that discount look like?
So a reissue rate, just for those that are watching, if you don't know, it is part of the rate filing. When we file with the Division of Insurance, there's certain discounts that we can use. And it typically, you'll see some variation of this, but if title work was done, a policy was issued within the last 5 years, there should be a reissue rate of some sort. So within the first 2 years, it's usually 50% discount on the owner's policy amount off the basic rate of the owner's policy amount. Okay, that it's not off closing fees or the lender's policy, it's off the owner's policy on the reissue rate. And then years 3 through 5 from the policy being issued is a 30% discount. So if it was $1,000 basic rate, then you would be paying $700 if it falls within that time frame for the owner's policy.
Gotcha.
Now, something for you to know, because I know you mentioned, if you close at the title company you purchased at, most companies, and this would be the same as Chicago, it doesn't matter where they issued the policy prior. It could have closed at another title company, so long as a policy was issued within that time frame. Then we'll give that reissue rate.
Man, I did a flip last year. See, and this is again, me learning and educating myself even, and it helps others, is I closed on a flip last year, and my understanding was I had to close at the same title company that issued the policy. So, and I really didn't have a great experience on the buy side, and I would have, 10 times went with a different company, but my ignorance led me to close with a company. It all worked out. It all was fine, but I would have much preferred working with a relationship that I had, that I can trust, that I just, go to sleep and know that on closing day, it's all going to look good, rather than go to sleep the day before closing and just stress about, make sure that everything goes well.
Yeah. I think some places want you to think that you have to do that. But now, in one circumstance, because I know related to this question is like on flips, there is another circumstance where you would have to close with the company that you bought through. And that's where, if you're doing a flip, you're an investor, it may be worth your while to do what they call a hold open policy. And are you familiar with hold open policies?
Nope.
So this is for an investor. A hold open policy is where, let's say you're buying from me. I I have a beat up house, you're buying it, you're going to flip it and sell it. But because traditionally in Colorado, the seller is paying for the owner's policy, we could do a hold open policy. And what that means, when we close and you're buying, we are going to hold that policy open. So seller is still paying for most of the owner's policy. And then you as the investor buyer will pay it's a hold open fee. And so usually each company is different. One might have like a flat fee to hold it open. Let's say, $100, $200, or some might say it's 125% of the basic rate. So example would be, I'm selling to you, I'm paying for the owner's title policy for you to the buyer. The owner's policy is $1,000. You as the buyer want to hold it open, meaning we're not going to issue it to you as the buyer. We're going to hold it open. That 125% would be $250, right? Because it's $1,000 basic rate.
Yeah.
Then when you go to sell, we will only charge the difference on the coverage. So if you bought for $200,000, you're selling it for $300,000. You've already paid your $250 of the 125%, right? Mm-hmm. And then you just pay that difference in coverage when you sell out, and then the policy is issued to that end buyer.
Oh, sweet.
So it can save you some money. It's not going to save you thousands, but it could save you, I don't know, $300 to $800, $1,000, depending on the amount of the sale.
And on the flip that I'm currently on, that I'm over budget on, that makes a difference to me.
Yeah, absolutely. So you just need to say that in advance as the buyer. Yeah. And oftentimes in those cases, the buyer is requesting, hey, seller, I'd like to close at this title company because I'm going to do a hold open.
Gotcha.
And then, so did that make sense on the 125%?
Sure. Perfect.
So,
Clear.
Yeah, seller's paying the $1,000, you're paying the difference. But that's how you're saving money, is because they're paying that main portion of it for you.
Sure. No, that's great information. I appreciate that.
Yeah.
All righty. Last thing that I want to jump in on, and my time's actually running crazy short because I'm actually finally going on a vacation with my wife.
I love it.
But is a seller's settlement statement. Luckily, it's not nearly, and we can, again, don't worry about the miscellaneous, but the main portions of the prorations, title, and commissions and payoffs, I'd love for you just to kind of go over them and what it looks like and what to expect.
So a couple confusing points. Obviously, the purchase price is the purchase price. That's going to be a credit to the seller. Obviously, that was a debit to the buyer. Your prorations, those are going to be like the most important one is, I think, the property taxes, because on the seller side, sometimes there's like, why am I getting debited this amount? And the idea is that, remember, in Colorado, taxes in the rear. So for 2020, we're going to pay those property taxes in 2021. So in a transaction, the seller is going to actually credit the buyer, and you'll see on here the settlement statement. It has a through date. Mm-hmm. They're going to credit the buyer from January 1 through the closing date of a prorated amount of taxes. They're debited, and then that's going to be credited to the buyer. So now the buyer will be responsible for the full amount of property tax due for 2020 when it's due in 2021, because they were given this credit for the amount of time the seller lived in there. So I think that's important for people to understand.
Right.
And then, the Metro District prorations and stuff will be similar to like an HOA proration. It's just a different entity that's getting monies. The title charges, you'll see here, the amount is much higher than it was on the lender's policy because they were getting that concurrent rate. Mm-hmm. Now in looking at this amount, that does not look like that was a discounted rate. That was a full basic rate based off that sales price. Yeah. Now you'll see on the side when it says extended, the 2000 extended, the Alta owner's policy is a standard policy used within the industry. It's kind of like the Colorado real estate form. Every real estate agent uses the same contract, but that doesn't mean that they don't provide a different service, right? They're still writing contracts and advocating for their customer in the way they need to. We use a standard policy form within the industry. And the last one that was updated was in 2006, the standard language. The extended part means that there's the owner's extended coverage part of the contract. This is OEC is being included in this. We're deleting the standard exceptions on the title commitment to give those additional protections that owner's extended coverage deletes. So that's why it says extended on there. That's what the EXT means. And then the other fee you see there is the seller's half of the real estate closing fee, the $170.
Okay.
So, and then, real estate commissions are on there. Any payoffs that need to be dealt with, whether it's a consensual lien, like a first lien loan, or a non-consensual lien, like a judgment or something like that needs to be dealt with, that showed up on the title work, you would see those amounts under payoffs if there were some. Now, we don't have that in this case, but that's what you would see. And then the miscellaneous, as you'll see, HOAs, metro districts would show up under there for any fees that need to be charged as part of transferring that.
Could you hit on utilities for me? Just real quick about how you guys calculate that. I know that's a big question for a lot of sellers that I come across is, how do they come up with this number, blah, blah, blah.
So the utilities is really a statement that's coming from that municipality. So whatever city you're in or water district, we are getting a statement for final sewer and water. And in some towns, for instance, Loveland, where there's some electric, it may include electric. If it's a municipal utility, we're getting a final reading for that. And then they'll be through a certain date for that. So it should be through the close date. Sometimes it's cushioned a little bit, and if there's any additional, then the seller would get that amount once it's paid. But because a municipal utility is a lienable item, we are calling to get that final reading so that one of the affidavits you sign at closing is it's like the water, sewer, and something agreement. It'll be named something like that. And that's just saying that, hey, this is final. We've collected a final reading. However, seller, you agree if there is a remainder amount due that's not collected, this is considered a partial payment and you are responsible for that remainder amount. Just to make sure that there is somebody responsible for that lienable item. Does that make sense?
Yeah.
So it should be through the close date, and there should be a final reading before it. And so it should be considered final. It's not very often that it's not sufficient. We don't run into that a lot.
And if there is a refund, how long does that generally take to get back to the seller that closed?
It shouldn't be long. I mean, the municipality, we're going to fund that file within a day, right? A couple of days, and those checks will go out. So really, a lot of it depends on, I guess, their accounts payable and how quickly they get things done. But it should be within a few weeks, I would say. And the same would be true with a seller when we're paying off their loan, their home loan, and they may have additional monies in their escrow account.
Right.
Any additional funds will be refunded to them, and it should be, typically within that, I'd say 2 to 5 week time frame.
Yeah. It's always fun, like my sister, same sister, she just did a refinance, and she got a check in the mail, and she goes, I got this check. I was like, yeah, that's your refunded escrow balances. You paid for it on your refinance. That was part of your closing cost, was to fund that escrow. And now you're getting refunded what had been sitting in the previous lender's escrow accounts for you. And she's like, so it's mine? I was like, yep, spend it how you wish.
Yeah. Yep. It is your money. You paid for it.
That is absolutely right. So, and then the fun part for the sellers to look at is, or at least in the last 10 years, is this due to seller, because it seems like a lot of sellers have done really well for themselves on the sale of their homes, a lot of appreciation in Northern Colorado. They see a lot of these things that are taken away from them as far as costs and fees and things of that. But fortunately, a lot of them have been making good money. So on this one particular, walked away with about $100,000, it looks like.
So in this case too, I jumped ahead earlier on the buyer settlement statement. This is where we would see if there's monies for closing for the seller, proceeds going to another title company. You would see that up under miscellaneous,
Gotcha.
Those amounts. And then here you would see whatever the seller is keeping, that would show here due to seller. And then there's always going to be a state, like a a document that asks the seller how they want their funds dispersed. Do they want just a title company check? Do they want a wire to their bank account? Do they want a cashier's check? How do they want those funds? And then we cut it accordingly. But just so you know,
straight hundreds. Do you guys do cash calls?
For what's that? For the?
Do you guys do straight hundreds, Benjamins?
Oh yeah. You know, we have a vault that we keep some gold bullion in there, and then some dollar
Bitcoin,
$100 bills. Yeah. So now the thing with getting funds wired is just know, even if somehow they send us wiring instruction in advance, we will not wire funds until they have in person or some way given us those wiring instructions and signed off on them, just as a protection for them. We want their money to get to them and not somebody else. Sure.
Yeah, we had a deal about 3 years ago, and it just was, there was a lot of stress because it was a couple $1 million deal, and the sellers literally were texting me like throughout the day, hey, haven't received my funds yet, and like I started to get like anxious. I was like,
oh yeah,
they will get there, and it was like at 4:00 in the afternoon. Funds are here. I was like, gosh dang, like we closed at, like I wish we would have closed at like noon or something like that, because I was getting texts probably like throughout the day for all that.
For a long time, yeah. And towards the end of the month, when there's a lot of closings and wires are going through banks, and I don't understand that process real well. I probably should study that and learn it more, but for whatever reason, they can get cut up. I always hear the term, it's caught up at the Fed, and I don't know what that means exactly. I know it goes through the Federal Reserve in some way, and then the wires are sent and stuff, but when there's a lot of wires and transactions going on, it can be delayed a tag. But most banks have like a time that if you initiate it before this time, it'll go that day. Right. I think it's 2:30, 3:00.
Yeah. Well, Ryan, I appreciate all your time. I know I went over. I promised you 45 minutes, but I really appreciate you jumping into this. And I look forward to doing deals with you. Honestly, I was talking with James earlier, a lender over at First Bank, and one of the things that I absolutely love doing business in this industry is the personal touch, and having that reliable person that I can, call, text, whatever that looks like, and know that they've got my back and are going to help me out, and they know that I'm going to, do my best and to make it a smooth transaction. But it's been great to work with you thus far, and I look forward to working with you more in the future.
Well, thank you. I appreciate that. We will get there, and it's important to me that to do it the right way and to provide good service. And right now, we're not ready for deals, and I don't want to pretend we are and fall on our face. So I'm going to be busting my butt to make sure that we have good people and we have our systems and processes in place. And so when that time comes, I think as we talked about on the phone, then I'll talk to you about it. But until then, use me as a resource. I can still answer questions. I can help with marketing items, net sheets, and just things that come up. And then we'll be ready to go once I have everything else lined up. But I still want to be a resource in the meantime.
Yeah. But by the sounds of it, you're kind of you're hoping for, and I don't want to put words in your mouth, so correct me if I'm wrong, but maybe early next year, early 2021, as far as up and running with doing deals.
Yeah, I would say that's that would be an under promise, over deliver. Let's plan for the beginning of 2021, but I sure the heck hope that we're rocking and rolling before that. But that would definitely give time for facilities and staff and everything to be put in place. I'm hoping for a lot sooner, but that would be about that time frame, I think.
Well, with your abilities, I'm sure it can go sooner, but I look forward to it.
Well, thanks, man. I appreciate it. I appreciate your friendship and your support in the business. So thank you.
All right, man. Well, thank you for everything that you've done for me today, and appreciate it. And if you guys have any questions, reach out and to me or Ryan. And I really hope this provided some value to you guys. So thanks for watching.
Yeah.
All right, buddy. Take care.
All right. See ya.
See ya.
Bye.